Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Today being a Tuesday, of course, the podcast is a little early. So, coming to market yesterday, it was a complete bloodbath with no limit. In fact, if you look at from the intraday high to the final fall, it was almost a 400-point fall, which was totally unexpected. But then, yes, there are few reasons for that. We'll discuss that. But if you look at what actually happened in the market, there was almost 1,500 crore sale done by the FIIs. But then there was an equal support by DAIs. They also bought a similar amount. But then that simply means that the major selling actually happened by the retail sector. So that's something which is kind of showing the fear in the market. Now, why that fear suddenly? So we did discuss about the Silicon Valley Bank and how the bank, fell, and from there the government started supporting it, and the U.S. government brought some law, in fact, to support such banks. And in spite of all that, and we could see the Dow futures kind of rallying up in the morning. We could see the SGX Nifty also rallying up, and finally yesterday the market opened flat, slightly positive, I would say. But from there, in fact, it went on to kind of look like a rally. It went up, and it was initially looking like it would be more of a consolidation day. But then there came a big fall, all because of the banks in India. So actually, there's no reason for Indian banks to fall, because Indian banks are much, much, much stronger compared to what is happening in the US. But then it is probably the fear in the market which has led to the sell-off. So market is kind of discounting the worst in the US in advance. So that's probably what's happening in Indian market. Now, what is the fear? Let me tell you that. So if you look at the US market, the Silicon Valley Bank, which was a mid-cap kind of bank, has fallen and collapsed. Now, along with that, other banks are also now facing a fear. The reason is, see, for example, if one mid-cap bank in India fails, what happens? All of us also who are invested in other mid-cap banks would think of taking out fund from there and moving it to more reliable banks. So that is probably a thing that can be seen in the US right now, because one bank failing and that fear in the market, a lot of people would think of taking out money from their other banks and moving it to good banks like JP Morgan or Goldman Sachs. So now that is where here the things come in. So when the market itself is seeing that fear, people will pull out of banks, and naturally these mid-cap banks they tend to fall. So when they fall, the benefit is, of course, to the bigger banks, because the money taken out of these banks, people don't keep it with them. They will definitely put it into bigger banks. So bigger banks would see this as a benefit, and smaller banks would face some harsh moves. So this is something which is kind of probably triggering the market. And along with that, we also have the CPI data, which is coming today for the US. Also, of course, Indian CPI data came in yesterday, which was at 6.4%, slightly lower than 6.5% in January. So that is kind of good, I would say, but still it is still higher than the RBI expectation of 6%. But then it looks like the way things are going, probably today's US CPI data, which comes also probably would be slightly better. But then one thing for sure is clear, that in the US, the markets are in really bad shape. Now, when the US market is falling, it just doesn't fall alone. It takes the entire global markets along with it. So there is a lot of fear actually spread in the market right now. So like I've told you earlier, 17,000 is a very important level. If that is broken, I would simply square off all my PE put positions and sit with my call side. That's expected, because otherwise the markets can tend to get further lot bearishness. So 17,000 is a very important support to be watched, and any kind of failure there can be serious on the downside. So let's see how things are, and let us see how the markets behave today. It is, of course, important to watch today and tomorrow, because today we have to see how the market reacts to Indian CPI data, and tomorrow we have to look at how the market would react to the US CPI data. So it should be cleanly watched for now. So as of now, like I said, 17,000 on the lower side is to be watched importantly. Let's see how things take shape, and looking forward to a day of decision making. So that's something which is important. Like I've told you, if the market fails and falls from here, that would be an opportunity again for investing. So in fact, we have about more than 40% of capital already moved out of equities in MPA family. So that could be of use during such times. So I would be going on more on a SIP mode of investment into the stock market as well as mutual funds to ensure that I make a good return out of this fall if that happens. So, however, let's see. When the market fall happens, probably this is not the way to talk. But then, as my experience in the stock market, I've only been seeing opportunities in every fall of the market. So that's exactly what I'll be looking forward to. So, like I told you, major focus would be on level 17,000, and apart from that, the next focus would be on the US CPI data coming today evening. So that's it for now today. Let's see how the market moves. With that, we will make our next plans. So goodbye, have a great day, and let's look forward to grow financially wherever the market moves. Thank you.